The General Industry Workers Union of South Africa says that the unaffordable increases in the cost of living are continuing to persistently not consider the working class. The union is calling on people who benefit from these hikes to be the ones who pay more instead of the poor. But we're also reflecting on Savings Month, and to unpack this, we've got, well, rather, can people even save in the current climate? So we will be speaking to the GIWUSA president as soon as he's available on Zoom. But in the meantime, in studio with me, I've got Abulela Gazi from Metropolitan, who joins us to talk more about the issues that are faced by consumers at the moment. So thank you very much for joining us this morning, Abulela. And I think one of the biggest things people think about when we start conversations around Savings Month is, well, I really don't have much to save. So how do I navigate my budget and still be able to save or invest anything that I can?
Sure. I think the first point that you mentioned around cost of living, the unfortunate reality as South Africans is that we are experiencing an increase in cost of living mainly because of the interest rate hikes that you've mentioned, as well as inflation. So naturally, what that naturally means is that the disposable income that South Africans have is under pressure, has reduced over time. You asked a question around, in that world, how do you navigate that terrain to allow you to continue to save for various life goals? One of the things that we talk about, and you mentioned it in your introduction, is around specifically budgeting. And that's the one thing that we believe is the starting point to allow for consumers to start having more disposable income at the end of the day. And when we talk about budgeting, generally it's a high-level word that people throw around. You must budget. But what does it really mean? What does it really mean for South Africans? Because in absence of you having a practical tool, a practical process that you follow, it then remains as a high-level word. So effectively, simplicity, budgeting is looking at how much income you earn in a particular period and then contrasting that to the expenses that you will pay in that particular period. And naturally, if your income is higher than the expenses, then you've got disposable income. But given some of the realities that we're experiencing as South Africans, sometimes, especially now, your expenses might be higher than your income, which then poses difficult challenges for South Africans. It's a difficult situation. However, there are practical steps that one could follow to reduce those expenses to be in line with the income that one earns. I mean, for example, one of the things that we talk about with our customers specifically is unpacking your expenses in detail between what we call needs, so the expenses that you need to incur to maintain your livelihood, food, electricity and water and the like, and then on the other side, wants, things that we spend on, but do we really need to spend on them? Not necessarily. And rather starting to focus on those wants, start eliminating the wants that don't add significant value to you as an individual. Start looking at the wants that you are incurring that are important, but there are other ways of achieving the same objective, like your gym membership. So really going through that list and being deliberate on what you'll cut out and what you'll reduce and what you'll replace. For example, gym membership is something that I talk about a lot, in the sense that you could invest in running shoes and run every day as opposed to pay a gym subscription every month. You're achieving the same outcome in terms of being healthy and exercising, but it's a lot cheaper, a lot cost effective. So you go through all these wants and really start unpacking them a bit more and eliminating the ones that are quite material. The unfortunate reality is you could go through that process and limit your wants, but still be in a situation where your expenses are higher than your income. And in that situation, what we encourage our customers to do is to start limiting, or rather start downgrading their standard of living.
Nobody wants to hear that.
Unfortunately, but the reality is, if you don't go through a process of doing exactly that, what will naturally happen is it knocks you into a spiral of debt, and at some point it becomes unsustainable. You default on your debt, your assets get repossessed, you knock into a different life. So we encourage our customers to rather upfront make those tough decisions as opposed to bear the consequences downstream.
And it's such an important point, because what we find, well, based on the conversations that I've had recently, is that a lot of people are living off debt, daily expenses, you know, groceries and the like. But we'll get to that. I want to introduce to the conversation the president of GIWUSA, who's Mametlwe Sebei, joining us via Zoom. We're having an important conversation here about the issues that have been raised after that interest rate hike that we saw coming out on Thursday, and the pressures that are being faced by workers. And you are calling on some kind of significant change to come about. Mametlwe, what would you say is that big point of change that needs to happen in the country when it comes to pressures of this nature?
Yes, thank you very much. I think firstly, we've got to agree, right? The people that benefit from, you know, the highest interest regime, higher interest rate regime is mainly the banking and the finance sector. I mean, just the fact that last year alone, they recorded, 99% increase in their earnings they made, of 89 billion rand. That is South Africa's four major banks: Standard Bank, Absa, Nedbank, FNB. That itself is telling. And we are saying that if you look at the factors that are behind inflation, there is energy, there is cost of transport, there is food. None of these are things that the working class can afford to cut off. And I think to say that by paralyzing them with a very punitive interest rate regime, 75% point increase, the highest in 2002, that is not going to solve the crisis. You are saying that the way that you can solve the problem of food inflation is basically by imposing a hunger strike, because you are saying that you want to collapse a demand in something that people are already lacking, something that is very basic. We are already having children in this country that are starving. And insofar as transport is concerned, number of workers are resigning from their jobs because their wages are simply now below just a cost of transportation that tend to increase by between 20% and 35%, according to a National Alliance. And we are saying that these are driven by energy prices, most of which are imported, but also is because of a corporate profiteering in that sector.
Mametlwe, we do have Abulela Gazi from Metropolitan with us in studio, so he's listening in and he'll be weighing in on the conversation as well. And Abulela, he raises a very important point about inflation there and those pressures like transportation and the like that have been placed on the consumer. I mean, what are your thoughts based on what he said and just how you spoke about it a little bit earlier, the budgeting aspect of it?
Look, the one thing I can agree on is everything that we're seeing in the economy is having a material impact on majority of South Africans. It's becoming more and more difficult to maintain our livelihoods. And I can appreciate that also the interest rate increase doesn't help some of the environment, specifically with the increase in cost of debt and the like. However, I think it's also important to appreciate that some of the main reason why there's a need to manage inflation is because the Reserve Bank need to balance a number of different elements. And if they're unable to balance that, it could have a material impact on the economy at large. And inflation is but one. Once inflation starts running, it becomes difficult to pull back, as we've seen in other parts of Africa at least. I do agree that I think as a country, as a society, we need to review and revisit how do we stimulate this economy? Because only when we stimulate the economy that we operating in does it create jobs. In creating jobs, people then can put food on the table and the like. So I do think it's a complex situation that we find ourselves in. I do appreciate that consumers are under pressure as a result. But I do think as the private sector as well as public sector, we must work well together to try stimulate the economy to benefit South Africans.
I want to get into issues around financial education and the literacy of South Africans in a moment. But Mametlwe, you've just heard there about the fact that it is the responsibility of the Reserve Bank to target inflation and really just to manage the value of the rand as far as possible so that we don't end up in a situation that we've seen in sub-Saharan Africa, Zimbabwe being an example. I mean, what are your thoughts on that argument?
I mean, the issue is, how do you basically manage inflation, right? Increasing interest rates primarily on the poor, who are the borrowers, but also the small and medium enterprises. That is exactly the perfect way of killing the economy, because the consumers are the working class, but also the people that we need to create jobs in many ways, in terms of small enterprises, are the ones that are going to be worst hit by this interest rate regime and so on. And what we are saying is that, and I think the point to be made here is that this calls on the need to rethink about the way that economy works, which at the present moment is in the basis of profiteering of big corporations that dominate the key sectors of the economy. And we have, as a union movement, but also the socialists, have said that capitalism doesn't work for a great majority of the working class people. And I think the only way out of this crisis is by making sure that particularly we take into public ownership and begin to plan the economy in the interest of the overwhelming majority of the working class people. And what does that mean for us? It means that actually nationalize the banks, the mines, the big factories, and the big agriculture to ensure that economy works for the interest of the overwhelming majority. We can mobilize enormous resources that are there in the economy to meet challenges of unemployment, of housing, of a key public infrastructure and services that we need. On any other basis, you're just going to be leading yourself from one contradiction to the other. The reality is, they are sectors of the economy that are profiteering from this. Taking energy as an example, right? Big part of the oil industry in this country is Sasol. That is sourcing its input, locally. The war in Ukraine is not affecting them in any way. They are every year cross-subsidized through an import parity pricing that allows them to charge the same prices as importers of oil at a cost of 30 billion rand to the whole of the economy, for which the working class people are paid. Tax that money, take Sasol back into a public ownership, and make sure that you use that money to subsidize public transport, taxis and buses for the working class people, for workers and students that are commuting daily to work and to schools.
Very interesting insights, and I'm so glad you bring up the issue about restructuring the way our economy runs, because in the United States, actually, they were behind the curve with the interest rates, and that resulted in a huge employment drive that happened in that country. But that's a conversation for another day. Are there issues of financial education in South Africa? Do you find that we struggle as much as we do because we are financially illiterate?
It's a good question you ask, in the sense that if you think about it at the purest level, given that South Africans generally need to stretch every rand, I don't think necessarily it's a lack of financial literacy that is at play. I think we as a business believe that it's mainly driven by the empowerment of South Africans. When you think of, for example, whilst people know how to what they need to do, whilst they know that budgeting is important, whilst they know they need these various financial provisions, call it, it's the support that they need in that journey. No one's there to hold their hand and say, let's work together to get you to a point where you're financially better off. So it's our view that financial advice is important to South Africans, to couple.
Do those resources exist? Are they affordable resources that consumers can approach to get the kind of advice that they need? 100%.
So across the financial services sector, all financial services companies should have financial advisors that are accessible to most South Africans. They'll help South Africans through this journey, the budgeting we spoke about, planning for the future, helping them be accountable to their plan. So definitely available across the industry, like Metropolitan, we've got a few. But we encourage all South Africans to seek that advice. Yes, I think we understand what we need to do. We just don't have someone to hold our hand and walk us through our financial journey. So that's where we believe there's a big missing link. It's not that we're financially illiterate, or rather the financial literacy is not where it should be. It's more, how do we partner, how do we as financial services companies partner with South Africans to help them achieve those goals.
I wish we had a lot more time to discuss this, but we have run out of time. Thank you very much, Mametlwe Sebei, for joining us for a short period. That's the GIWUSA president, and of course Abulela Gazi from Metropolitan, talking about the pressures that consumers are facing at the moment, financial pressures, and really the little that you can do in these tough times.